This topic is presented by Land Investors R Us. Do you own rental properties? In today's topic, tax deductions for rental properties, we will explain the different types of deductions you can take to minimize your tax liability and maximize your profits, to compensate for all the headaches that come with being a landlord. We have to start by saying that all expenses that are ordinary and necessary to run a business can be deducted from your gross income. These expenses need to be reasonable and within the tax regulation dictated by the Internal Revenue Code. The most common expenses you can deduct for your rental income operations are: mortgage interest expense. If you took a mortgage to purchase your rental property, the portion you paid toward interest is deductible. The total amount of interest will be reported on Form 1098 every year to the IRS and to you as a borrower. Rental property owners can report these expenses along with rental income on Schedule E. You can also deduct interest on other type of loans used for improvements, and any credit card interest for purchases related to your rental property. Property tax. This is an ad valorem tax imposed by most states and local governments in the U.S. Homeowners are allowed to deduct it if they itemize their deductions using Schedule A, as well as rental property owners in Schedule E. Insurance premiums. Homeowners insurance that protects lenders, or homeowners, is also deductible. Depreciation. Depreciation expense represents the wear and tear of a rental property, and even though it's not a cash outflow, you can deduct this expense for every year that you own the rental property. The useful life is estimated in 27.5 years, so you get a 127.5 depreciation per year. Be aware that there is a depreciation recapture for the time you sell your rental, and essentially, it is a procedure the IRS established to recover some of the tax it lost when a property owner reduced a tax liability by depreciating the property. Legal and professional fees. If you hired a CPA to do your accounting, taxes or audit, or a lawyer to help you with contracts or evictions, you can deduct those expenses. Repairs. All necessary and reasonable repair expenses incurred to keep the property in good condition, and that do not add value to the property can be deducted as well. Office space. Office space leased or even the home office you have set up to conduct your business can also be deducted. If you use part of your home as office, you have to calculate the amount you can deduct as an expense. If you are self-employed, you can take this deduction. Talk to your CPA to get help on calculating the deduction, or let us know if you need help. Email us your specific information, and we will do it for you. Advertising. You can deduct expenses incurred to advertise your property as a rental property. Auto expenses. If you use your car to collect rent, show the property to prospective renters, or other activities related to the rental property, you can deduct it. Cleaning and maintenance expenses. Expenses incurred to clean the property, lawn service, and even the homeowners association fees, are deductible. Other expenses you can deduct are commissions paid to realtors to get your renters. Utilities, if you paid them for your tenant. The cost of any supplies you provide to your tenant, like AC filters. Casualty losses after deducting the portion covered by your insurance policy. And management fees if you do not handle rental activities, but hire someone else to do it for you instead. Conclusion. Being a landlord is not an easy task. The risks that you take are also high, so make sure you get a profit that compensate for all that hard work. Thanks for watching. If you have any questions, please email us to landinvestorsforlife@gmail.com. If you like the content of this video, please consider subscribing.